Hey everyone, welcome to UJXanti. Today we are going to speak about Bitcoin's price action. Bitcoin has been in a huge rally for more than a year, and we didn't have any 30 or 40% corrections. If you are not familiar with what I'm saying, during the last rallies that we had, even the last cycle, we had many 30 or 40% corrections. Even if we exclude COVID, the pandemic recession, we had many drawdowns, like we had 50% in one stage. Then even in the blow off top period, we experienced a couple of 25 or 30% drawdowns. And also, yeah, we had close to 50% drawdown in the summer, but then we had secondary peak. So after that, we look at the current rally. We see that we didn't have a lot of drawdowns. So 24%. Then we had something similar here. So 20% around. Let's try to be precise. 21. Then this was pretty much 21 as well as I remember. Yep, something close to that. And this is the last one. So let's try to be precise. Yeah, another 23%. So we can see that we didn't have 30 or 40% corrections, which we usually have during Bitcoin rallies, bull runs. So one might suggest that this is because ETFs, because we have constant flow into ETFs and we didn't experience any event that can lead to ETF investors to offload their BTCs. So this is something that we will need to see in the upcoming months, quarters, whenever we have some negative macro event or maybe geopolitical event, we will see whether ETF investors see Bitcoin as a safe haven asset or they see Bitcoin as a risk asset. So now the question is whether we already experienced something like this in prior cycles or is this something new for this cycle? So what will history tell us? Let's just remove those. So if we go back to the last cycle, we experienced something similar to the current situation. Of course, it was shortened than this, but all the other things were quite similar to the current conditions. I'm talking about the 2019 bear market rally. Actually, this was a quite a huge rally. I guess it was close to 300. Yeah, it was more than 300%. So by saying that, let's differentiate two rallies in the last cycle. Let's just get rid of this. The first rally was in 2019. And then we had a drawdown, 50% approximately. After that, we had the short-lived recession. And only after that, we had the parabolic rally that we all remember, which was from 2020 to 2021. So what were the differences between these two rallies? There were actually many differences, and we can spend hours discussing those differences. But today, I would like to talk about the monetary policy. Let's have a look on the balance sheet of the Federal Reserve, the central bank of the USA. So here it is. Let's get rid of this. So the yellow line that we can see is the balance sheet of the Federal Reserve. And whenever the balance sheet goes up, increases in value, we call these periods quantitative easing. And whenever the balance sheet goes down in value, we call it quantitative tightening. Let's just don't get into the details of monetary policy. So in easy terms, what does these two terms mean? Quantitative easing and quantitative tightenings. And in short terms, we can say QT and QE. Basically, quantitative easing means that Federal Reserve injects money into the markets. How do they do that? They just buy government bonds usually. So they buy bonds by giving money to the commercial banks. So they buy bonds, mostly US government bonds, from the commercial banks, and they give in return freshly minted money most of the cases. So they inject money into the economy and they collect government bonds. And quantitative tightening is the reverse of quantitative easing. So instead of injecting money into the economy and uh, collecting government bonds, they do the opposite. So they take money from the economy and they give government bonds instead. As you can see, right now we are in quantitative tightening because the balance sheet of Federal Reserve goes down. Uh, Unfortunately, Bitcoin has a short history and we cannot have a look on different business cycles. So let's just have a look on the whole history of Bitcoin. As you can see, we had only short periods of times when we were in quantitative tightening. And yeah, we are in one now. We just uh, don't have a lot of data points. However, we can see that in 2019, when we started our rally, it was in a QT environment. So we were in quantitative tightening environment. And then the pandemic and the recession came along. And after that, we had uh, the infamous quantitative easing programs and stimulus payments. And balance sheet just imploded. After that, we had this massive rally of QE, and only after that we had the second parabolic rally in the last cycle. So why monetary policy matters? So basically, when we are in quantitative tightening environment, there is no excess liquidity, and the goal of Federal Reserve is to take excess liquidity out of the economy. And it's the opposite when we have quantitative easings. For example, after the pandemic, we had a couple of months of stimulus, and the Federal Reserve announced a massive rally of quantitative easing, which brought excess liquidity, which is just, let's say, money and credit into the economy. And that excess liquidity finds its way in stock market, real estate, everywhere, as well as in crypto assets, namely like Bitcoin and altcoins. Not all of them, but most of them. So that's the difference. So whenever we are in quantitative tightening environment, it's there is no excess liquidity, and this rally cannot be sustainable. And we have the opposite whenever we have quantitative easing. So whenever quantitative easing started, there is excess liquidity. People have excess savings, let's say. They don't know what to do with their money. They buy stocks. Some of them have some additional, like higher risk appetite, and they don't buy stocks or real estate. They just go and buy Bitcoin. And some other degens may go and buy some meme coins or other things. So liquidity is maybe the most important thing when it comes to the asset appreciation. And even though Bitcoin and other cryptocurrencies are not perfectly correlated with equities or some other financial markets, they still require liquidity, which is most of the cases excess liquidity to go up like this, to have some parabolic rallies. And whenever we have quantitative tightening environments, we do not have that excess liquidity. That's why uh, these kind of runs are not sustainable. So we don't have new investors in this environment. So this is only old players playing around. So people from the last cycle. And here we see continuation of the trend, and it's a sustainable run. We have retail investors, some new marginal investors coming here, entering the market when the prices are already in elevated levels. So That's the difference. That's one of the differences in 2019 and 2021 rallies. And when we come back to today's environment, we see that we are long overdue for classic 30 or 40% corrections in this stage. If we draw some parallels with the last cycle, even before the COVID pandemic, it was a black swan event, so we shouldn't even take this into consideration. Yeah, the yield curve is now inverted, and there is a high probability that we will have a recession in this business cycle as well. However, let's just ignore the COVID pandemic recession part. Even before that, what we can see from the top of the rally, the QT rally that we had, we went down for around 53%. That is a big correction. So to recap, we can differentiate two types of rallies, QE and QT rallies. To put it simply, quantitative tightening is intended to take the excess liquidity from the economy, basically from all of us, the institutions, the companies, and all of the people. And quantitative easing is the reverse, is the opposite of it. So it just gives you money. So it makes excess money abundant in the economy. So quantitative tightening decreases the amount of liquidity in the market, which in turn makes companies and people have less money to invest in financial assets, including Bitcoin and other cryptocurrencies. And if there are no new investors, the rallies cannot be sustained. That's what we saw in 2019. Yeah, we had a huge rally, but we didn't have retail coming back. Retail only came back when we had looser monetary policies, which was quantitative easing, of course. Right now, we can see that we are still in quantitative tightening environment. And this means that the level of liquidity goes down in the economy, and people and companies find it more difficult to find extra money to invest in financial assets, including crypto assets. And this means that it will be very hard to sustain this rally. And if we follow 2019 scenario when we had a rally during QT environment, we couldn't sustain it. That's why even before the recession, the pandemic recession, we had a 54% correction. When we come to today's environment, we still have quantitative tightening environment. And again, we had a huge rally during this QT period. And now my bias is that we are not going to be able to sustain this rally. And the difference of monetary policy is not the only one between these two rallies that we saw in 2019 and 2021. There are more than 10 differences, and we will look at those differences in separate videos. So we should be open-minded, and we shouldn't expect the price of Bitcoin to go up in a straight line. And we should be open to the idea that we might see something similar to 2019 when the prices went up without 20 or 30% corrections. And then we saw a big correction of 40 or 50%. Like in that case, it was 54%. In this case, it might be smaller than that. But the idea is that we might have correction before going higher than this level. The positive thing is that quantitative easings will inevitably come. And whenever they come, we will have excess liquidity in the markets. People will start to invest in crypto assets again, and we will have a parabolic rally again. Between now and then, we may experience some corrections, but if you hodl, it will pay off. So thank you for watching this video. Please like and subscribe. I'll see you next time.